Mehraboon Irani, Principal and Head with the PCG Group of Nirmal Bang Securities joins us. Mehraboon, good morning and thank you for joining us. Characterize the market action for us. We've seen a stellar rally, but based on global cues and market internal, looks like some choppiness has kicked in because we are no longer staring at a thrusting move.
If you are trying to ask me, Nikunj, that are we in for a sharp fall, my answer is no. The fact is, if people are now trying to bet that, okay, the markets have gone up too sharply and the election results, if it's not in line with market expectations, we'll have a sharp fall. I think people are blind. The fact is, I think the market verdict is going to be in line with what the market expects. The question is, yes, market is expecting earlier 220 seats for the NDA. Now they're talking of 235, 240 seats, and if the numbers are slightly below that, we'll have a 200 points, 250 points crack on the Nifty, but that's all. People are saying who the coalition partners will be. Don't forget the UPS function with the Mamata Banerjee. So I don't think the markets are going to give a sharp thumbs down to what is going to happen. Personally, unless and until I am very wrong on my political analysis that, okay, fine, we are not going to have the NDA coming to power, I think all the bets are still very much on the table. We have gone up a little bit too sharply. There could be a correction. You are talking of global markets. Yes, the global markets are reasonably well in 2013 and 2014 also they done well. There could be a fall here and there and we could correct here and there. But at the end of it all, the bet on the market front is going to be that things are going to improve from here on, while nobody is stating that GDP is going to go back up in a hurry. So 1, 2, 3 quarters will be of poor growth, but there is a hope. The perception is that things will improve, and I think this rally which we are seeing isn't for real. There could be a correction here and there. There could be a fall of 100, 200 points also. But unless and until the verdict is absolutely against the market expectation, which I don't think will happen, I don't see reasons why one should be predicting a sharp fall in the days ahead. I think we are still very much below the 2008 highs if you take away the inflation and the rupee depreciation. Also, if you see the FI inflows, have been $4 billion, of which nearly $2.5 billion have come in the last 3 weeks. So I think somewhere the retail investors should still short in the market. I still believe that 90% of investors are asking their portfolio managers to exit from the market and reduce the exposure in the market. So retail investors not long, Indian investors not long, be it an HNI, be it an ultra HNI. It's only the foreign funds who are bought into the market. So I personally feel if the verdict is more or less in line with market expectations, for all you know, we'll have one more reason for talking positive as far as the market goes. So in the short term, there could be a correction. Yes, I agree with you. There is some sign of profit booking happening. We could have a decent correction coming. But that's no reason to say that markets are going to come off very sharply.
Mehraboon, let's start off with earnings then, because they've not been an impressive lot, although that is something which is already in the price. We already knew last quarter that, earnings are going to be no great shakes this time around. How have you mapped the private banking blue chip earnings which have come so far?
Asha, I would put it this way, earnings don't matter honestly this time. What is important is the election verdict. As far as the numbers goes, I don't think any person who has possibly enough grey matter who was saying that earnings are going to show sharp improvement. We know things on the ground have not changed much. As far as the numbers go so far, not many reasons to complain, but yes, you are right. Some of the stocks which have gone up too sharply, the earnings are going to disappoint. There could be a correction coming in them, especially in some of the capital goods and infrastructure stocks. They have gone up too sharply. And I would say that in quite a few cases, there has been a mean reversal. When I say mean reversal, is stocks which had come down from 800 rupees to 50 rupees. 50 has become 110, people say, the media says, and we all say, the stock has gone up 100%. But where was 800? 800 had come down to 50. So those type of cases, the mean reversal will happen. What is important is that will the fortunes of this company change? The answer in many cases, unfortunately, will remain a no. So I think people will need to be selective a little bit here and there. Stocks have gone up a little bit too sharply, and there are reasons why market men may feel disappointed in some of the stocks because the numbers will not improve, and certainly we will see that happening in the next one and a half, maybe 10, 15 days when the results continue to come in. Because not many companies whose stocks have gone up are going to possibly enthuse investors. But at the end of it all, there will be a correction in the stock prices, but again the same thing will happen. Perception will come back into play and people will buy those stocks. Classic examples are Voltas and a Crompton. Good names, definitely good names, but the stock has gone up 125%. And buying now, I think, invites you to the wrath of investors or market men as and when the numbers come out, because I personally feel the numbers will not justify such a sharp up move in the stocks which have happened over here. That's what I'm referring to mean reversal, because if you look back at what Voltas and Crompton was 3 years ago, 4 years ago, they had come down too sharply, and from that level they have bounced a little back.
What about banks? Because the wave of late seems to be, sort of in favor of the PSU pack.
I think the beta has come into play over here. The people are now trying to wager a bet that, okay, the doubtful debts will come down, recoveries will improve, economy will recover. So that type of trade is on, and I think a large part of the trade is possibly behind us. Those stocks have gone up a little bit too sharply. And I think if you ask me from the numbers specific, I think IndusInd Bank was very impressive as always. But Axis Bank, good. ICICI Bank, not many reasons to possibly complain. But ICICI Bank and Axis Bank, especially are high beta names in the banking play. And if you ask me, should one buy into them, I think a correction possibly. And if you want to be a short-term trader, answer would be yes. But at the end of it all, if you ask me for the entire banking sector, I would say that I'm still a little bit too concerned about the restructured assets number. And I think possibly the worst is still not behind us. So from a longer term perspective, if you ask me, will I be advising people to go and buy blindly into the banking sector? My answer would be no. But from a trading angle, I think a correction possibly could, and choose short-term traders to buy into it, because I personally feel that there is still some space for this bank stocks to go up, at least in the short run.
Okay, so let's talk about one group which sort of has surprised everyone, and that's IT. When we started the year, the consensus view on the street was that nothing could go wrong for IT. US economy will bounce back and IT stocks will go from strength to strength because valuations were attractive. But now, IT stocks are underperforming. Earning is a big issue. Currency is no longer a tailwind.
True, Nikunj. I think, but if you look back at the way IT stocks had moved up, along with pharma and maybe FMCG also, which people continue to call them defensive bets, but that's the only place where people are heading the money as far as the stock market goes. I think the trade was a reverse trade. If you look at pharma, besides some names which are in the news for corporate developments, even pharma as a pack has not done well.
Lupin is almost at an all-time high.
Yeah, but it was at an all-time high even 2 months ago. So from that level where most of the stocks have gone up 30, 40, 50%, they have not done too many things. Will I keep my money in Lupin and Sun Pharma? Answer is maybe yes. Will I keep my money in TCS and Infosys? Answer is certainly yes. They may underperform in the short run. Your bet is right. I think the currency thing which people were talking about, that is possibly slightly like retraced as far as the positives coming out of that. People are not now taking it into calculations as of now. But at the end of it all, I personally feel the story is very much intact. Because if you look at the better managements in the IT sector, and I'm referring to names like TCS and SCL Tech and even in Infosys, I think going ahead, you can always say that 2014-15 is going to be better than 2013-14.
So for those who are
currently, they had gone up too sharply. The fact is, valuations were, they may be looking a little bit stretched. And if there is opportunity elsewhere, which market men perceive, there is a possibility that we can make money elsewhere, and that is where the money is rotating out of IT and moving towards capital goods infrastructure. Will there be a reversal of this trade happening? It could happen one fine day.
Let's talk about industrials, Mehraboon. And the key question is, how does one really differentiate wheat from the chaff? Because not everything in the industrial space is good. Similarly, not everything in the industrial space is bad.
I think you are dead right. I think quite a few of the stocks in the industrial space have gone up a little bit too sharply. And I think when Aisha was asking me about the corporate results, I think there could be room for disappointment in terms of numbers. But I always say that market is ahead of the entire clan or entire group of analysts put together. The fact is, market is not giving a thumbs up to the fact that, oh, things are going to improve or numbers are going to be good. Market is saying things will improve, and that is what the direction is positive. So there could be a correction in quite a few of the stock prices of industrials. Your point, how to differentiate, I think ultimately the end of it all, but it's, I would say experience comes into play. And experience means that the companies which had withstood the previous recession and come out pretty well are the names you should look out for.
I can only think of L&T.
Well, there are names, the names which you mentioned earlier. Now, if industrials, if you can include names like Voltas and Crompton, they are great names. They're great names. The fact that they've gone up a little bit too sharply, and if I had bought at lower levels, and I think I was very vocal about Voltas at 90, 80 rupees, I think we are sold off. But you give me a 15-20% drop in the share price, and I'll buy it again. And those are the men to differentiate from the boys. I think you are dead right. I'll add one thing further to what you said, Nikunj. I think quite a few of the companies are so badly over-leveraged. And considering the fact that public sector banks don't have the money possible to kickstart these projects, even if a new government comes into play, there's going to be a big question mark as to when, and even if the economic cycle takes off, when it will get translated into the balance sheet and the P&L account. There's a big question mark. So ultimately, at the end of it all, this is a trade which you have participated, you made money, you're a little bit late for the trade part. But at the end of it all, if you're investing, wait for a correction, buy into the companies which you call as men. And I would say yes, names like Larsen & Toubro, Voltas and Crompton stand out.
Mehraboon, what is your sense? Does it seem like rupee could be a big spoiler?
I don't think rupee is going to appreciate much more from you. I don't personally think so. Again, it's the perception. Again, it's the fact that things will improve. The government which is likely to, the party which is likely to form the government is openly stating that we will work on strengthening the rupee, but it's not so easy and it's not going to happen again in a hurry. And we have already appreciated according to me. So if you're asking me, I think from here on, at least on the positive side, I think it's not going to be too much. So I don't see rupee appreciating maybe beyond maybe 1 rupee more from here. Personally, I don't think so. So I think even the IT thing which Nikunj was saying, I think largely it is already built into the present prices. So I don't see too much of appreciation happening from here, at least not in the short term. But yes, if we have a Modi coming into power with a big majority, we could have a sudden spurt as far as the rupee goes, a sudden appreciation of the rupee, but I don't think that is going to sustain beyond. Because India ultimately ends up gaining also with rupee depreciation because we still need to work on the trade deficit front. And our exports are going to take a big hit. That happens. So ultimately, any government coming into power cannot afford a sharp appreciation of the rupee, even if that happens. So I personally feel it's not practical, it's not going to happen.
So if you don't expect rupee to appreciate or dollar to depreciate, do you think somewhere it's time to cash out of oil marketing stocks? Because oil marketing stocks of late have appreciated quite smartly, and the core thesis there was that a strong rupee will reduce the subsidy burden.
I think 2.5, 3 months ago on your very issue, I think I had mentioned that it's time to go and buy into certain oil marketing companies. But yes, I agree with you that oil marketing companies' stock prices have gone up a little bit too sharply. And I don't think at the present valuation, at the present prices, I'm going to recommend them all over again. But this is a space which could turn out to be very interesting because we all know that whosoever forms the government, and assuming it's going to be a Modi-led government, I think they will have to work very quickly on the subsidies part, and that process is going to continue because let's not forget the credit rating agency is still watching us. So I think this space will continue to be of great interest to the market. We also have the gas pricing issue. So I think oil and gas pack will continue to attract attention. The oil marketing companies, I agree with you, Nikunj, that they are a little bit too expensive. And I think I will look at names maybe like an Oil India at number 1, ONGC at number 2, and Reliance as the dark horse. So none of the 3 stocks I'm recommending at the moment to be bought in a hurry from a short-term angle. But they are the stocks which could definitely attract attention as soon as we have a stable government in place.
What are your top 3 holdings?
Oil India at number 1, ONGC at number 2.
Across the board. What are your top 3 holdings?
In the market right now?
In the market, in your portfolios you manage.
I think we are looking at certain mid-cap names which we have bought into, have given us money, and we are quite certain we are going to continue to make money in them, which are not going to be subject to too much of volatility irrespective of what the election outcome is going to be. We like a name like First Source Limited.
Okay.
We have bought the stock at around 17 rupees, and we are quite confident that from the present price of 28 also we will see at least a price of 50, 55 over the next 12 months, and that's saying a lot. We like something like a Dalmia cement in the cement pack, where I personally feel we'll have the biggest upgrade coming in the cement sector after Ultratech some years ago. Will happen in Dalmia cement, and that should happen over the next 6 months. You will understand what I'm trying to say in terms of the capacity expansion. After JP Unit, Adunik Cement, OCL being taken over. I think that is the other stock. In the textile pack also we like names like a Himmat Singha Seed and a Satlej Industries. Okay. And the textile machinery company called Lakshmi Machine Works, I think dirt cheap at 2,900 rupees. We are seeing a very conservative 3,600 coming in the next couple of quarters.
Let's keep HDFC Bank aside. It's an expensive stock. But ICICI Bank and Axis Bank, Yes Bank, IndusInd Bank, all of them are still trading at attractive levels. Even though the run-up in some of these franchises has been strong, valuations are still on your side.
True, I think, but the name which you mentioned, HDFC Bank, my personal view is the stock is attractive, but the problems are there that were our FII holding. Yeah. So it's been a rank underperformer in the last 2 months. But HDFC Bank and IndusInd Bank, let's separate them. I'm not saying men from the boys over here, but they are the names which are less, not very high beta names. But the other 2 names which you mentioned, ICICI Bank, Axis Bank, and even Yes Bank, no complaints with the numbers. The stocks have gone up a little bit sharply. If you look at the last 3 years' performance, they've done nothing much. Especially ICICI Bank has done nothing. Yeah. At the present levels, will I continue to hold on to them? Answer is yes. Will I be in a hurry to buy them for the very short term? I would wait for a small correction. Because of the fact that over the last 2 months, they have done reasonably well. I remember ICICI Bank was somewhere below 900 rupees. And the stock has made a quick, decent up move. So from the present level, from a short term angle, considering that we are just a couple of weeks away from the big event, I don't think I'm in a hurry to recommend it from the very short term.
Do you think you will get a correction if we get a favorable government? The correction which everybody is waiting for, that may not come in.
The problem is, Nikunj, 100 of 100 market men, irrespective of how deep his pocket is expecting this thing to happen. I think the market which is expecting 220 seats is now expecting 240 seats, largely built in. So unless we have 260, 270 seats for the NDA, I don't think the market is possibly going to celebrate to that extent.
Okay.
Though I definitely feel the rally will continue, because as I mentioned earlier, the Indian investor is still short. He's still very skeptical. He has lost a lot of money in the last 4 years, and he saw this as an exit opportunity, because ultimately, while you feel that NDA will come, Modi will come, somewhere you feel that I have recovered a large portion of my loss in the last 2 months, say thank you to God and move out. And I know a lot of investors are planning to exit or are already exited. It's the foreign money which is still in the market. And I personally feel that the Indian money will come back into the market. So yes, there could be a further upside. But 230, 240 is already what the market expects. At 230, 240 seats, if you're expecting that, I think a large part of it is already discounted. And if you are not if you are a little bit of risk averse, I don't think you should be in a hurry to buy into the high beta banking names which you mentioned. So from a longer term angle, I personally feel if we have a stable government, the perception will be things will improve. The perception will be that the restructured assets, which is a major concern for them, that concern will slowly come down. Credit offtake will slowly improve if the economic recovery ultimately happens. So at the end of it all, there are reasons to be positive from the very long-term angle. But from the very short-term angle, after the sharp run-up we have seen, if I'm yet wanting to trade from the next 7-10 days, I would wait for a small correction to come in the stock prices, especially now knowing that the results are behind us.
The FMCG, or rather consumption stream, Mehraboon, clearly has taken a big dent in not just, the last 1 year, but the last 2 years. Valuations getting rich. There has been a evident demand slowdown as well. Would you expect anything big from the likes of Jubilant FoodWorks, or for that matter, Unilever, when it delivers its earnings today?
I don't think there are going to be too many surprises. I think the environment is still very challenging for them. The factors, the names are good. They are well-tested companies, and ultimately, at the end of it all, if I have my money in Hindustan Lever or even in ITC or a Dabur, I think I'm quite comfortable holding on to them. Because as I mentioned earlier, most of us, especially Indian investors, while we expect Modi to come, we are not ready to put in more money into the market. So I personally feel relatively safer being in some of the pharma names and FMCG names. That's the way the Indian investor is thinking. So I don't see too much of money coming off the table as far as the stocks goes. So on a valuation basis, I think they're a little bit stretched. The times are still challenging, and if, like what Nikunj was mentioning, if we actually have a verdict in line with the market expectations, it's definitely possible that the money will still go into some of the high beta stocks, and these stocks may continue to underperform for some more time to come.
Before we wrap, give me a multi-bagger idea.
First, social budget, 100%.
Gone from 9 to 20.
Yeah, 9 to 20, but I'm quite confident this is going to be a 55 rupees stock in the next 12 months. We have been telling it to our investors. We are expecting an earnings of around 2 rupees 90 paise for 2013-14. We should improve to around 4.5 rupees next year. That is current year, 2014-15. Valuation should be at least 14-15 times. Because
15 times it will be higher than Infosys in terms of a P multiple. Is it possible?
That's the way BPO companies are valued globally. They are higher than IT service companies or IT product companies. But the problem with FSL has been the debt. And therefore, I'm giving it a valuation of only 9-10 times. But I'm quite confident by December 2015, this will be a debt-free company, net debt-free company. And then, obviously, the valuation will go up. So I think, looking at the way the company is deleveraging itself at the end of every quarter, I would give it a 10% appreciation coming in the share price every quarter. So 28 will become a 31, 31 will become a 34, and this should happen for the next 6 to 8 quarters. So you make your calculations, Nikunj. I think it's a 55 rupees stock in the next 6 to 8 quarters. You own the stock? Yeah, we are owning it. That's a clear disclosure, and we are going to continue buying into it and recommending it to our clients. Okay.